Good morning and welcome everyone to the latest Protect Association webinar. I'm James Edmonds, I run the Protect Association and I've spent the last 20 years working across insurance, financial services in strategy, customer experience, vulnerability and consumer duty roles. And it's fantastic to have you all with us today. Protect Association is a 25-year-old industry network that brings together leaders from across UK insurance to share insight, discuss regulation and to improve customer outcomes. We run regular webinars, in-person events and produce industry insight reports, all designed to connect insurers, MGAs, suppliers and regulators in an open and collaborative way. If anyone listening would like to find out more about the Protect Association, please do get in contact with me. This session, one I've particularly been looking forward to, this is around brand versus experience in personal lines insurance, what really matters. We know that in financial services and particularly in direct consumer personal lines, branding can play a huge role in trust and decision making, but in intermediated channels, things can look different. Do customers care more about the strength of the brand or the experience they actually receive, or is it a mix, or is it something else altogether? What really helps insurers get hold of customers that stay longer, buy more, and refer others, the ultimate commercial goal. I'm joined by two brilliant guests today. Lucian Camp, the author of No Small Change, Why Financial Services Need a New Kind of Marketing, and one of the UK's leading voices on financial services branding, and also the entire workforce at Lucian Camp Consulting. And Christopher Brooks, Managing Director of Lexington Group and a customer experience leader with decades of experience helping firms put outcomes and experience at the heart of their business. Between them, we're going to explore the role of brand and experience in shaping customer loyalty and trust in personal lines. And while they may not agree on everything, I think we're going to get a fascinating discussion. Before we get started, a quick reminder, we'll begin to take questions at the end of the session. So please do post them in the chat on the LinkedIn page as we go. And finally, a big thank you to Voice, who are our sponsors of the 2025 webinar series. So I'm going to hand over to you first, Lucian. Opening perspective, let's set the scene. Can you share your perspective on why brand matters in personal lines insurance? Maybe share a bit of experience as well, brands you've worked with, and where it plays the biggest role compared to other areas of financial services.
Very good. Thanks, James. Thanks for the introduction. Good morning, everybody. And thanks to the Protect Association for inviting me along to this webinar this morning. And let me start off with a few sort of introductory remarks. Just a couple of definitions, I think, just to make sure that we're all on the same page. Firstly, as you just mentioned, James, I am going to be focusing very much this morning on personal lines. I'm not talking about other parts of the marketplace. And secondly, when talking about brand, I still feel a need to just very quickly say what I mean when I talk about brand. It's still one of those words that can mean rather slightly different things to different people. So just for the avoidance of doubt, when I talk about brand, I think what I'm talking about is a distinctive and positive awareness that a thing has built up in the minds of an audience. It could be a product, it could be a service, it could be a corporation, it could be any one of a number of things. But if it has successfully built up distinctive and positive awareness in people's minds, then as far as I'm concerned, that's a brand. Yeah, okay. So that's where I'm coming from. And what I spent most of my life trying to do is to help organizations of all sorts, many or most of them in financial services, to build these brands in people's minds. And I've worked over the years with a number of insurers. I was very much involved with Wilson Alliance's More Than brand a few years ago. I did a lot of work with Direct Line. I've worked with the Pru. I've done some work with Vitality. I've worked with most of the major brands in the market over the years. And what I would say is brands matter. And why do brands matter? They matter fundamentally because when all other things are more or less equal, consumers make choices on the basis of how they perceive brands. Now, quite often, all other things are not more or less equal, and consumers don't make choices on how they perceive brands. And particularly in insurance, particularly the role of intermediaries is very important in guiding consumers' choices, to the point that if they do have any feelings about brands, they're of relatively secondary importance. It's the recommendation of the intermediary that is decisive in guiding the choice. And that's certainly been the case in insurance for a long time. And frankly, it's one of the reasons why in this market, there are not very many very strong brands out there. Firms have tended to invest in the power of their distribution rather than in the strength of their brand. But going forward, I would certainly argue that we've entered a period now, and this is very much about digital, we've entered a period where consumers are more likely to be making more choices of their own. And if that's the case, then the more that happens, the more their brands are going to matter. So that's basically my argument in favour of brand and why it is important already and becoming ever more so.
Sure. Thank you, Lucian. I can certainly attest to your work and views. So I spent about 10 years at Royal Sun Alliance and about 2.5 years in More Than working on their customer programme. And what I can say is we didn't really spend much money at all on brand awareness or advertising at that point in time, but the brand was still highly recognised by consumers according to our research because of the strength of the brand and the original marketing that was done when it was established as that D2C, a much more memorable brand than a Royal Sun Alliance product D2C. So in terms of, I suppose, over time, how have you seen perception shift from when you started working in financial services and more particularly in insurance to now?
Well, I think we are going through, a shift, a really important shift in the nature of, the retail financial services market, and it's happening. It's not happening overnight, but over a period of time, we are moving from, an industry that has revolved around face-to-face selling to an industry that will revolve around individual consumers choosing. I'm not suggesting that face-to-face selling will ever disappear. It certainly won't. But the economics of moving to a self-serve digital model are so compelling that I think that's what is it? Is it a 10-year or is it a 20-year transition? As I say, it's not an overnight transition, but it's a very fundamental change.
And do you feel that customers trust brands more than intermediaries, or is it the other way around, do you think?
Sorry, James, just say that again. You dropped out for a second there.
Do you think customers trust brands more than intermediaries, or is it the other way around, do you think?
No, that's a good question, isn't it? That's probably quite hard to generalize. I think they trust some brands more, and I think they trust some intermediaries more. My experience about customer perceptions of intermediaries is that customers generally have some anxiety about intermediaries generically, but they'll always tell you that it's all right because I've got a good one. So there's a bit of a difference there between the sort of collective point of view and the individual who is greatly respected and appreciated.
Fantastic. Thank you, Lucian. So, Christopher, over to your side. So you may argue it's all about customer experience. Can you outline why you see experience being the defining factor, particularly in personal lines? And obviously, feel free to introduce yourself or to bring in any other experience that you've had around financial services where your arguments would be supported.
Yeah, thank you, James. And again, thank you to the Protect Association and to VOIC for making these webinars happen. And it's delightful to be here with Lucian. So a bit of a disclaimer, Lucy and I do know each other very well and have worked together across insurance lines in the past. And I've sat as one of Lucian's team as a brand planner. So I'm very empathetic to the position. But I have transitioned to be a customer experience specialist and have worked in customer experience with many insurers as well. Some of those we've highlighted already. And I think the reason for that is an understanding that there needed to be slightly more than a reliance on a fabulous concept, which creates a really strong perception of what that engagement is going to be like. And Lucian mentions, for instance, More Than, which when it did come out seemed to knock insurance out of this park. It created, if you remember Lucky the dog, such an iconic association, not just the individual concept of the dog, but what it represented. And it almost really empathized with what we all were feeling when it came to insurance. it was simply brilliant. And you could, as you differentiate, you could dine out on it for a while, and then the customer would buy the product, and things would be very, very different, because the operations wouldn't necessarily be lined up to deliver the promise of the brand. And we found over the years working with organizations, the shift to actually say, well, perhaps the brand should reflect the operation that we can deliver. That's a more honest approach. And as we've seen with increasing regulation, that's where the focus has become. So please, can we ensure customers are buying into that which can be delivered? And that which can be delivered is the experience. So I think, to use Lucy's quote, what we really need are distinctive and positive realities. And for that, you need the customer experience, something tangible to actually appreciate it. And 2/3 of decision making, in accordance to the EXQ study, which has been running for many years, comes from your own experience, which is post-purchase. This is the dilemma we have in insurance, because having been in insurance for many, many years, I can still hear it ringing around the office. Don't talk to them. Don't wake them up. Otherwise, we might find we simply look elsewhere. It kind of was a very uncomfortable reality. And then we all know that the claims experience becomes that huge, significant experience, which defines the relationship with the organization, at which point, from a profitability perspective, we're into a completely different paradigm with the customer. So it is difficult. What we do need is to ensure that experience gives us enough tangible connection with the customer. So when it comes to making a decision, do I take another product with this insurer? Do I renew my policy? Can I trust I've got the right product? You've got enough real solid touch points to be able to feel confident. Now, what I don't deny is, where did that start from? Well, the brand has to project that in the first place. But as Lucian highlighted, we're talking about a very different landscape to as we did back then. And yes, we have a percentage of people who will still buy through intermediaries. And I do think it's how the intermediary decides the criteria of what's important does affect your choice, because that becomes their recommendation. But if that's not there, then what are those opportunities now in a very digital world to get that experience? And that's where it becomes really important for the teams to work hard to understand, how can we deliver a really good experience so that our customers can remember us. And many categories, travel insurance is a really interesting one, because it's so low engagement. But there are ways to do it, and I hope we'll come on to that as we discuss further. So I guess I'm saying, the experience is really important, because the digital landscape has changed things, and the FCA have made it very clear that you need to demonstrate engagement is of good value to the customer.
Yeah. And do you think that a great experience can outweigh a weak brand, or is that simply too much at times?
Well, I think with some of the new entrants, absolutely. If I take my son's experience as a 17-year-old learning to drive, and 2 or 3 of the larger providers just kind of sent him away with a flea in his ear, forgetting that he's got 50, 60 years of driving ahead of him. And he, like I, will have children, and or he has parents who now won't use those companies because they treated him so poorly. And he found an organization who are pretty young, called Marmalade, and they've absolutely blown it out of the park, because what they have done is to provide a really decent, engaged experience that has meant he is significantly more conscious of driving than I was when I was at his age. Now, that for me is a really positive experience. Marmalade are not a large organization. They don't have the budgets, and they're in a very, challenging market, young drivers. So yes, I do believe you can, but obviously he found them rather than them finding him, which is obviously what brands have a brilliant way of doing.
Interesting. I suppose at that point, how do you define what is a weak or a strong brand? So Marmalade, for me, feels like a strong brand. That's quite a memorable name, isn't it? That would stand out, I think, amongst other names of other providers. And I imagine there's some quite good marketing and branding that would go alongside that. So would you say that's a strong brand or a weak brand at that point?
Well, well, for a brand for me, and I can't remember, maybe Lucian even taught me this, I don't know. But what I like to do is close my eyes and reach back. And I like to feel I can touch stuff. That for me gives me substance to a brand. And Marmalade wasn't there when I reached out, but now it does. It's built it up through the engagement and the experience. So if you ask me, I would say consider that as an option. But I mean, Lucian's the expert on kind of whether you would perceive it as a strong brand or not, if it doesn't have kind of a big broadcast presence.
It's not a big brand, is it? I mean, it's not up there with Aviva or Legal in general, but it can still be strong in its particular niche and among its particular audience. Which you're suggesting there of young drivers. It may have great strength among young drivers, while quite little known elsewhere.
Okay, so we're going to move into a bit more of a unstructured debate type format here. So think Lucian versus Christopher. We're not going to ask you which side you come out on, but I imagine we may well find some sort of agreement at the end. So I know you two well enough to know you can talk about this for hours. I've got a few prepared questions that I will ask as we go, and I'll use this point to remind viewers to post any questions in the chat on the LinkedIn page as well. But yeah, by all means, take this time, Lucian and Christopher. So first question, can an outstanding experience thrive without a strong brand?
Yeah, can I just pick up on that point? Because I bow to no one in my appreciation of the importance of customer experience. I mean, financial services is basically customer experience. I mean, that is the sort of heart and soul of it, really. The customer experience is all important. But I would just suggest two challenges to Christopher in this market. The first one, which I suppose is the more obvious one, is that personal lines insurance is a fairly low touch engagement with consumers most of the time. It's not like a grocery product that you buy every week, or a shop that you go to, or your order with Sainsbury's. You may not need a touch point with a personal lines insurer from one year to the next, and it's quite hard on that basis to build up what we're calling distinctive and positive awareness of your experience when the touch points are infrequent, very infrequent. One of the most infrequent, I'd say, of most consumer markets. So that would be my first challenge. And my second challenge, I think, would be taking a slightly different angle. And that would be to say that as a consumer, if I think about insurers that I've dealt with, I'm not really seeing significant difference in the basis of the experience. I don't see it. I mean, maybe I'm just not being perceptive enough. Maybe I'm not remembering well enough. But my perception of dealing with the insurers that I've dealt with over the years is, frankly, they've all been much the same. And that doesn't help me to make choices on the basis of my experience, if you see what I mean. What do you say to that, Christopher? I mean, out there experience?
I think you're absolutely right. And I think, James, you and I have had this conversation before, that kind of sometimes when you ask customers what success looks like, they will say, you leave me alone. So to your point, I've set it up. I've done the hard work. I'm the good guy here. I've protected me, my family, what I needed to do. Now, hopefully, you and I won't need to talk again. See you in a year's time, and that's it. So that doesn't really create an engagement. I guess what you could say, though, is if I did that over 50 years, there's at least 50 points of engagement that need to happen there, which is quite significant, and you can kind of build it up over time. And I think this is really okay. So I totally agree in terms of low engagement. What I do think, though, is that some brands have recognized, and I think this is where a shared value model can have real value. So if I talk about Marmalade, there's an app in which you are seeing how well you're driving all of the time. And it can give you confidence in your driving. It can show how well you're doing compared to other people, and it can improve you as a driver. That's the same as any other motor insurance policy, which you just sign up for and you switch off until you need to claim. So there are ways in which you can bring it alive. You mentioned earlier, Lucian, and we've spoken about this before, Vitality, who actually, every time as a Vitality customer, as someone who goes and does a park run every Saturday morning, I am physically reminded, and I also have an experience with that brand, which is a shared value model, which says, look, we're in the business of of health insurance and keeping you healthy. You're in the business of keeping yourself healthy. Let's work together on this, and let's find a common platform, which is not around the transactional processing of our contract, but actually a common interest, and we can work forward on it. I saw Nick Turner, who's the MD of the NFU, talking a couple of weeks ago, and he was saying there, really, if you want to get the value out of the relationship with that organisation, you've got to care about your rural community, because that's their focus, and then roll off lots of things that you can get involved with. So if you are inclined to care about the organisations that you're engaged with, then there is great opportunity for them to step marginally into your world and share with you a perspective that perhaps will allow you to engage with them in a different way, just beyond the transaction. That's a mindset shift. If you're an insurer whose mindset is focused on, can we just deliver on these customer outcomes, then you're never going to move into that particular space, because the customer outcomes, they don't cover customer experience. The customer, the fact, do I actually get a product that's priced accordingly to what I think it should be, and comes full of all the things that I need and is relevant to me? Now, in that premise, the Vitality shared value model wouldn't work. The NFU model wouldn't work. You wouldn't do it. You'd stop doing it. So I think you do have to stretch a little, but I would argue that brands, when we talk about getting that standout, that's what they had to do in the first place. They had to stand out above the basis. Harvey Keitel, as an icon for Direct Line, arguably, was that essential for the insurance products that they sold? Of course not. But it allowed them to get punch and stand out. Experience is no different. You need to get punch and stand out if you want to engage customers. Of course, you have to deliver the essentials. You have to deliver what's expected, and you have to deliver it in an empathetic way to who they are. Then you can bring in essence, which is the brand, and how that can be built into the experience. So it isn't straightforward. It's a little bit more complicated, but I think it can have a really important role in a low-touch sector such as insurance.
Yeah, we spoke. Sorry, I was just going to say, Lucy, we spoke at length in our prep call about Vitality, didn't we? And I said I found it particularly interesting how the dog in their adverts plays the role of the customer, in that they almost are signed up to this brand, but holding them to a standard of fitness that the dog is ultimately too lazy to actually reach. But just a very interesting window into being a customer of Vitality. I thought made the brand very accessible. So just moving on a little bit, and Lucy, and I appreciate what you wanted to make there, so by all means make that after I ask this question, and then we can move on. But when things go wrong, when the rubber hits the road, so i.e. a claim, I suppose we'll be talking about largely in the world of insurance. Do you think that a strong brand helps recover trust faster, or does the experience win out instead?
I'd be inclined to say, and I think I've seen research to this effect, that the claim experience is the most sort of intense moment in the relationship between the customer and the insurer, and it will be the actuality of how the customer is treated in the claim experience that will have the dominant perception on their minds, and other perceptions that may have been built up over the years or whatever will somewhat sort of pale into insignificance in comparison to how the claim is actually treated and processed. It is the absolute sort of, defining moment, really, of the relationship between customer and insurer. And if there's a loss of trust there, if that goes badly, then I think getting that trust back after a bad claim experience, regardless of the absolute rights and wrongs, after a perceived bad claim experience, I think it's a very difficult road back to a strong, trusted relationship. Would you agree? Do you think that's right, Christopher?
No, totally. Yeah, I do. And I think that this is where the challenge is, because if you have a brand that you buy into, what you don't get revealed within that is, we actually outsource parts of our claims management. Sorry to say. So, we don't have a contact center that manages it. It goes to a third party, and then they actually don't handle the claims themselves. That goes to another third party. So you've bought into this, wonderful veneer, and that's when it becomes the veneer. But actually, when you go through it, you then start to realize this is not what I thought I was buying into. That's a really unfortunate thing, because if we talk about, having 50 years of renewable, premiums, many of us, I'm sure on this call, are with insurers for many years because we just haven't got around to moving. If at that point you then go through that experience, you feel awful in yourself that you made such a bad judgment over all these years. You trusted this brand and it kind of let you down. So I think it's absolutely fundamental. I think what I would say about it is there is probably opportunity to build brand into that experience, which is very difficult to get brand to the table when you've got compliance and underwriting and everyone else sitting at the table saying this is how we manage it. But I remember seeing an amazing piece of work from Lloyds Bank many years ago who changed the first question in that claims handling based on what they'd done in trying to get closer to their customers from, what's happened, or can we get you to a hotel, to what would you like us to do first? And the example they shared was an elderly couple who said to that question, well, the first question was asked, which were they learned from it, which would have been, would you like a hotel? It was like, that doesn't really help us. Their problem was their house caught fire, but every Sunday they spoke to their grandchildren in Australia. And they were not going to be able to speak to their grandchildren, and that would scare their grandchildren because where were Nan and Granddad? So when the Lloyds asked, what can we do for you first? They said, could you get us an iPad? They didn't want a hotel. Sit on a park bench. They wanted an iPad just to talk to the grandchildren, because every time of week they would do it. And I think it's that empathy of, that comes from the brand to actually bring that forward. So there's opportunity even within the claims experience to really bring the brand through, but to create a very important experience.
No, I think that's a great example, and I think one of the things it tells me is that, I take your point very much about that outsourced model that is increasingly the way the industry works, and I do think it's been my personal experience that that companies who do outsource are not all that appreciative of the need to spread their brand message through to their outsourced partners, so that the partners know how to behave in a brand-minded way on behalf of that client of theirs. The brand has to stretch into the corners of the way the organization delivers, and that includes dealing with your outsourcing.
Example of that, we were working with about must be 10, 12 years, I can't remember how many years ago, it was a long time ago, and we were looking at where the experience really mattered, and we found that nearly 30% of the experience was managed by third parties, and actually that was determined through SLAs, and it was really down to the attitude of the third party as to whether and some of them did, they learnt the brand book, they decided to understand what that brand was delivering. Others were fulfilling the criteria of the SLA, and there were two partnership managers for the whole company, and they had no idea of what experience was or what brand was, and yet they were responsible for a great big chunk of that experience. So absolutely to your point there, Lucy.
And it can't when you're going through a claims journey and some random organisation you've never heard of before reaches out to you to try to understand a little bit more about your claim or about how they can assess or to bring your claim along a few steps. It just feels so bizarre.
We should say though, James, there are some brilliant ones out there who do, and this is what Nick Turner was saying, that they do a lot of third-party risk assessments, and what they really find is important is organisations that say, tell us your story, tell us your strategy, where are you going, what do you want to achieve for your customers? Because they have such confidence that then you're going to line up your third-party operation to be a seamless extension of my business. And that's really, really important. And so there are some brilliant organisations out there that do get that.
Yes. Sure. I'm just going to rewind on this a little bit, but take one step back for a moment, though, and say that, it doesn't half help if your business strategy, as reflected in your brand, is to do with doing something somewhat different for a particular segment of consumers. And that's where, the Vitality and the NFU examples come in, and a few others. Those are organizations which are clear in their minds about how they intend to be different and whom they intend to be different for. And when you start with that understanding, and that to me is a brand understanding, you've got a spring pad for a great business. If you haven't got that, if that really just isn't there, you haven't got anything to say that gives you that potential for difference, then you're on hiding to nothing.
That's very fair. There is, I think, a misunderstanding that you should always create kind of world-class leading customer experience. But actually, the investment in customer experience should be proportionate to the importance it is to your customers and the value it brings to your business strategy. And to your point, Lucian, if you are a middle-of-the-road business, you're not focused on a distinct part of the market, and you just take your proportion of the market along with everyone else, then you need to make sure your experience reflects that. It doesn't need to be world-class. In fact, investing in it is probably going to create a negative return. So I do understand your point there. Those brands that do have a differentiation in the marketplace because of who they're serving have the opportunity to stand out and do things slightly differently.
Yeah.
Good stuff. So I can see 3 questions have come in. Alistair, Tracy, and another LinkedIn user. We will get to those in a moment, but please do keep those coming, and we'll leave a quarter of an hour for those at the end. Just want to move on a little bit more to talk in particular around, I suppose, regulated markets. So sort of like all of financial services now with the introduction of Consumer Duty, but particularly in insurance. I'll come to you first, Christopher. So where now firms must evidence good outcomes, which is adjacent to good experience, it's certainly not the same thing, but do you think that these outcomes now define the brand more than ever before because they are having to record and measure them in a regulated environment, and it's not just NPS now, let's say, or CSAT, it's another way of looking at the actual, what have we delivered to the customer? Has it aligned to their original intention when they took out this product or service with us?
Yeah, well, I guess firstly I'd say I hope it isn't NPS, because that's not an outcome I've ever had. I've never taken out a product with the intention of recommending recommending it to someone else. That would be the right outcome from NPS to measure. Otherwise, it's not relevant. It's a really weird thing to kind of connect the two on. I think I really empathize for those working in insurance companies, because if you can imagine, if you have someone like Lucian or someone like me sitting around the table with those responsible for delivering the customer outcomes, they're quite challenging to achieve. And there's a lot of changes, as we've seen, needed to be made internally to authentically deliver it rather than just kind of, put a coat of paint across it. And then you get someone like me saying, yeah, but if you actually were to focus on delivering a memorable experience, you will reduce your acquisition costs because your customers will be more engaged. But we're going to need to do this and this. And then Lucian sits there and says, and do you realize, because of who we are, we have to do it this way? It's just, you just go, guys, could you leave the room, please? Can we just get these customer outcomes across the line and then we'll reset? So I think it makes it really challenging. And going back to Lucian's point, you end up therefore just falling in the middle. Everyone kind of does it. What do you do then? Do you do a Vitality and create a loyalty program away from it? Which is then slightly unfair because that creates probably about £250 for savings, but that won't be put into your customer outcome calculation for value from a product. Or do you just say, let's just focus on, creating a great brand icon, getting more in, and just accept some will kind of disappear because other great brand icons will steal them away. It makes it very challenging. I see the sense in it, and of course, I think we're all great supporters of it. But I think it makes the job for those inside insurance companies more challenging. Maybe rightly so on behalf of the customer, but I'm not sure the customer's true outcomes, are fully represented yet in what the FCA define as customer outcomes anyway.
Yeah, I mean, I think I don't have too much to add to what Christopher said, which I very much agree with. But I guess, what I would say is that, as a marketing and communications guy, my experience, again, over quite a number of years, has been that regulation has come to, more and more dominate the agenda, has become the prime concern of teams working within financial services companies. You can see why. There's not much doubt about that. But it is regulation first and everything else second. And the plea that I know it's a pain having to deal with us. You've got enough to deal with the bloody regulator without having all these marketing and communications and customer experience people as well, throwing in their toughest worth. But you've got to make space for the stuff that we do, because it does matter. Regulation is over dominant at the moment, which doesn't mean to say regulation should be less dominant, but it means that we should be more.
Yep.
Absolutely. Okay, excellent. So we are, I suppose, nearing the end of what we would call the debate type section. Lucy and Christopher, are there a words, a short sentence that you think we can land on to find common agreement between you two? Not that you've necessarily disagreed too much on things, but where exactly does the balance lie? Do you think? Is there anything that we can agree on?
I think the important thing from my point of view is that we're talking about, two sides of one sheet of paper, really. Where the brand, the plea that we've both been making is for the brand and the experience to be aligned. To be, two sides of a coin. I would still argue, I think, that in terms of getting into consumers' heads, that the things that you do to promote the brand have probably got more to do with what's in their heads than the detail of your experience, just because in insurance they just don't have enough experience. At the end of the day, I think More Than was always going to be more famous for Lucky the dog than it was for the way that it handled claims. So I think when it comes to projecting fame, that distinctive and positive awareness that I spoke about, I think that the brand activity has more to contribute than the experience activity. But that doesn't mean to say that they must not be perfectly aligned. As far as that can possibly be achieved.
Sure.
I think from my perspective, I would say if you are providing a functional, decent experience, then you are not likely to be able to claim any fame for it. People are not going to say, wow, that was just the most amazing mid-term adjustment I've ever been through. It was just amazing. So you have to be, therefore, very reliant on pricing or your distribution channels or anything else to bring your business in. However, the easiest and the most sustainable way is to give yourself an awesome brand that allows you to create distinction within that experience and is a win-win. People see you for something different when they're considering you. And then when they come through the door and experience that relationship, it's just baked in, as we were saying earlier, that it's just baked in. So I think don't go either or. Either say neither and just provide a basic experience and then rely on other factors, or go for both of them, go hand in hand together and create something really distinct that customers say, I come because it just seems very different, but I stay because it's a great experience that reinforces why I need insurance.
Yeah, sorry about that, James. Much as it would be nice to get a bit of a punch up going here, I'm afraid, sadly, we very largely agree with each other.
And also, the thing you can't see on the camera, Lucian's about 6'4" as well, and I'm not. So I don't think a punch up would be very fair.
Yeah, let's stay on the same side. Have we got any questions, James?
Lucy, we've got through. I was just going to bring everything back together and say, while it was a few years ago, I did spend some time in More Than Pet Claims, and you wouldn't believe the amount of times that Lucky the dog is mentioned in pet claims themselves. So, it's still something that resonates with people. So the brand and the experience certainly there going hand in hand. So, Question first up from Alistair Pegg. Do you think that insurance companies are more aligned to brands now than they were, or are they indifferent to the power of brands?
Let me just quickly take that and say, just going back to what I said at the beginning, yeah, I do think that the growing importance of digital, does change that equation. And I just don't think you can rely on managing your distribution to the extent that historically it's been possible to. And it's to say, it's not an overnight change, but it's a gradual change. And we're moving towards a situation where consumers will be more responsible for their own decisions. And pretty much without exception, brand is important when consumers are making decisions. There are other options, of course. You can compete on lowest price. There will be a lowest price provider that will use price as their principal source of advantage. But in consumer choice markets, brand matters more.
Yeah. Anything to add, Christopher? We can.
Yeah, I mean, Alistair is, a marketer of the year from the FSF, so kind of knows what he's talking about here. So I can kind of see where he's coming from. But I think it's about responsibility. I think it's understanding what brand can do for you, and having the strength of character when you're going up against your underwriting team and your pricing team to be able to make sure you can't create a brand without investing in it. If you're going to invest in it, you need to demonstrate the return of it. You can't expect a business, a financial director, to give you a couple of million to go and create a brand, or however much it costs these days. If you can't demonstrate that, there's going to be an incremental gain for the business by doing so. So I think it's the responsibility of the brand manager to be able to demonstrate, yes, this is going to be a better option than just going down the pricing route, as Lucian said.
Absolutely. Thank you both. So we're going to move on to Tracy's question. So how impactful do you think Trustpilot reviews are? And in your opinion, do they help build on a brand?
Do you want to take that one, Christopher?
Yeah, I'll start it. I'm not entirely sure. I think let's call it Trustpilot or whatever review platform it is. There are a proportion of people who would consider those opinions in their own decision making. It's one of the criteria. Now, if you read 3 or 4 of them and you read, they refuse to pay my claim, I'm going to the ombudsman, then of course that will have a huge impact on your decision. But if the scale of the brand is such that is still attracting you, kind of like, to honey bees to honey, and you're kind of thinking, I think it will be different for me. Or as Lucian said, if your intermediary is saying, yeah, there are 4 exceptional cases, I know about those. Actually, let me show you, they typically pay out at 86% of the time or something else. Then I think it dilutes it. If you are of the type that provides those reviews, then probably, again, you take more interest in them. So they certainly are important. And, someone working in customer experience, we scrape the sentiments of everything out there to really understand what matters most to customers. So some of this stuff is very, very important.
Yeah, I think it's a good question, and I think it's an important point, because I think that reviews are potentially important as a kind of feedback loop. I mean, I said earlier that the trouble with experience is that experiences are undertaken by individuals fairly infrequently, but reviews can magnify and amplify those experiences so that they become sort of publicly visible and become public currency. And reviews really matter. I mean, if your reviews are out of line with the experience you're trying to deliver and the brand you're trying to build, you've got a problem. I mean, a lot of consumers are going to spot that. And I think again that reviews are only going to get more important. I mean, in a world of more empowered consumers, reviews are a vital part of that empowerment.
I think there's an important point with reviews to make, is if somebody goes to a review platform, they don't have the confidence to deal with the organization in the first place. That's why they've chosen to go down there. And I have myself used a review to create the attention I need from the organization. So if you've got lots of complaints going out on your reviews, and they're not coming to you first and foremost, then what does that say about you as an accessible brand? That that your customers feel they're going to get a greater response if they go away from you than they lean in towards you. So I mean, think about why they're giving those reviews in the first place. But I should iterate. I mean, Lucian's absolutely right. They can be, as we've seen in the past, very, very damaging if they're kind of not dealt with effectively.
Good stuff, thank you. And a question from an anonymous LinkedIn user. I wish I knew it, because actually it's a fantastic question. So I might want to source them to help me mediate these discussions. But simplistic, does this boil down to new business versus renewal? I'm likely to buy because of the brand, but I'll stay because of the experience. The disruptor for that would be something like Trustpilot, where I am relying on other people's experience to guide whether the brand is a good or not purchase for me.
Yeah, I mean it's a good point about new business versus renewal. I think the only thing I'd say about that is that, again, coming back to my point about typically fairly weak levels of engagement between customers and their providers, that actually the renewal advantage to the provider can be less great than you might imagine. We're all getting more and more promiscuous in our behavior these days. We ought to probably mention the role of comparison sites and other tools to help us make choices. Our level of loyalty to existing providers is remarkably low. In insurance, increasingly we know that probably the best way to get the best deal is to switch providers at frequent intervals. So I think that the sort of the advantages of being in place as the existing provider are still there, but are dwindling. I'd still quite fancy my chances of being able to get a new brand into the consumer's decision making, even in a renewal situation.
Yeah, don't disagree with that. I think I always think renewals are kind of like if you're doing a hurdles, 400-meter hurdles, the renewal's the water jump. It's just different to everything else. It's just not as easy as it perhaps should be, and you end up kind of having to. You either miss it, you go around it, and then you kind of then regret the fact that you didn't take time to do it, or you don't quite feel like you've understood fully what you needed to assess to do that. Now, why doesn't your existing insurance provider help you understand these are the points that you need to be assessing? Please go there. You might remember many years ago, I think it was Norwich Union introduced something called the Marketplace, where basically they showed you what other people were providing within your renewal quote, something like that. I remember many years ago. And it obviously meant they lost a lot of business because it disappeared very, very quickly. So that's the challenge is if you've got no bank of experience to lean back into to think, yeah, they've been a good organization. If there was a new restaurant came to town and you were considering moving, you'd think about the old restaurant and how many times you've been there and whether you'd enjoyed it and had a good experience. You don't necessarily have that with insurance because we don't have, because it's low touch engagement, which goes back to can you create engagement to actually affect a decent relationship? The balance there being that what you don't want people to go is, yeah, it was really good. My God, how expensive was that? Do I really need it? And then you kind of shot yourself in the foot of it. So you've got to be very careful on it's a delicate, it's not easy, really not. It's not easy. But I take your point, Lucian. I think there is opportunity for someone to come in and just blow the market apart again.
You can get, I think, in this area some fairly kind of perverse effects and some fairly perverse behavior. I mean, in motor these days, I would assume that I'm going to switch each year, and I would start with a sort of negative perception towards my existing insurer, absolutely regardless of the job they've done, just because I think I'm going to get a better deal by switching. So, you get a loyalty. What's the opposite of bonus? You get a loyalty disbonus. Which is, as I say, quite a strange idea, but I think
it's unfair, isn't it? Really, you've done such a good job that I'm going to consider others.
Yeah, you've done such a good job that I'm going to have to leave. Yes.
Yeah. Good stuff. Well, thank you both. And talking of leaving, we have no more questions, so we'll wrap up. So brings us to the end of today's session. A huge thank you to Lucian and to Christopher for your insight and expertise, and obviously thank you to everyone else for joining us as well. So What was clear in personal lines insurance, brand and experience play vital roles, but the brand depends on disruption, whether it's intermediated or direct, and on perceptions, which play a huge role. So I think we found some agreement there. A reminder, you can catch all of the recordings of these sessions, past and present, on our webinar page on the Protect Association website. And if you're not yet a member of Protect, we are always looking for new members to join from across the sector. So please do get in touch with me if you'd like to join. Thank you again to our sponsor, Voice, and thank you for joining us. And we look forward to seeing you at the next session.